Good morning and welcome to Stock Market Today. It's Friday, November 2nd, 2018, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. And you can head over to ChaikinAnalytics.com/today to sign up for a free email to follow along with this show. So stocks rose for a third straight day. The S&P 500 adding 1.06% as the oversold conditions and the negative sentiment, which we've been mentioning, have helped to move markets higher. The Russell 2000 and the NASDAQ outperformed. The rally has pushed the S&P 500 through the first key resistance level in that 2,700 to 2,720 zone. Materials, consumer discretionary, and industrials led. Utilities were the only sector to close lower on the day. Treasuries were stronger, with a bit of curve steepening, and the dollar was weaker on the major crosses. Gold finished up nearly 2%. WTI crude, though, settles down 2.5% back near the April lows. Breadth on the NASDAQ, on the New York Stock Exchange was strong, positive 3.2 to 1. Breadth on the NASDAQ, positive 3.3 to 1. As I said, your outperformers, materials, consumer discretionary, and industrials, along with healthcare and tech. Your underperformers, Utes, telecom, REITs, fins, and consumer staples. As we get to the desk this morning, S&P futures are up 60 basis points, but off the best levels of the morning following that three-day rally. European equities are gaining. Asia rallied overnight with Hong Kong the standout, up 4%. Treasuries are weaker. Dollar is lagging. Gold is off 20 basis points, and WTI crude is down 20 basis points. And all eyes will be on the non-farm payrolls report this morning, where an increase of 190,000 jobs is expected. Looking at the structure of the S&P 500 now, you can see we've rallied for this third consecutive day. Support is in the 2680 to 2700 zone. Resistance comes into play in the 2750 to 2770 zone. That includes the 200-day moving average. The RSI is moving from oversold, and I'm asking the question, will it move from bearish ranges? Key here for the bulls, as far as I'm concerned, is momentum. Notice how during the uptrend, momentum remained pretty much above the 50 level, except for this small dip lower as we were grinding higher. That's called being in a bullish range for this indicator. With the sell-off, we've dipped below, and rallies have not been able to retake that 50 level. I think retaking that 50 level is a positive momentum shift. Right now, the momentum is to the bearish side. Despite the rally over the past 3 days, momentum is still bearish. So what we want to see for the bulls is that RSI to break and sustain a move above 50. We'll see if we can do so today. As I said, S&P futures are rallying. Chaikin money flow indicator remains bearish but continues to improve. We'll see if that can push back above the zero line as well. As far as I'm concerned right now, the onus is still on the bulls to prove it out. But the fact that we've retaken some key resistance levels is a positive. We're starting to see some of those short-term breadth divergences that we talked about yesterday. I think you want to use rallies to buy strong stocks when they become oversold. Market in a minute. Here's what I'm talking about. If you receive this email, you'll find the 5 key points that I'm talking about in my note today. For Chaikin Analytics members, we already talked about stocks rallying through their first key resistance mark. Small caps outperform and retake broken relative support. I think that's important. Semiconductors move higher from an oversold condition. That's on a relative basis, and we'll take a look to see if that has any legs. Crude oil continues to weaken, and futures do point to a higher open today. Your major indices from a power bar perspective seeing some improvement, as you would expect with a 3-day rally. Dow is 5-4 in favor of the bulls after it was up nearly 1%. S&P 500 up 1%. 47 bullish or very bullish stocks. 94 bearish or very bearish stocks. So still skewed to the bearish side, but getting better. NASDAQ getting better as well. 13 bulls, 17 bears. NASDAQ outperformed yesterday, up 132 basis points. And the small caps were the big outperformer, up 2.25%. 172 bulls, 476 bears. Still not a compelling picture, but getting better. Bonds uptick. Materials, big oversold rally yesterday, up nearly 3%, 2.8%. But that power bar ratio for materials is still bearish. 1 bullish or very bullish stock, 9 bearish or very bearish stocks. And according to the Chaikin Power Bar, small cap stocks and large cap stocks remain bearish. Major indexes are mixed. Turning now to our stock of the day. If you're getting our Power Feed email, you'll know that Banco Popular is our stock of the day today. Has a very bullish Power gauge rating comes to us from the Banks and Thrifts Industry Group, which is weak. Stock closed at 52.39 yesterday, up 73 basis points. And the Chaikin Power gauge rating for Popular is very bullish due to very attractive financial metrics, very strong earnings performance, and strong price volume activity. This is a name that we've actually liked within the beaten down financial space. And we'll take some solace in the fact that it's been a relative outperformer, but it hasn't, ripped the way we would want it to rip for a long idea. But a very bullish stock, strong trend, but a weak industry group. Taking a look at the ribbon at the bottom of the screen, reading the chart from the bottom up, we can see we're on that very bullish rating and that the market and the model are in agreement. However, we're very overbought, and money flow, while improving over the past few days to weeks, is still bearish. I think you keep Banco Popular, BPOP, on a bullish watch list. I'd rather get it when it becomes oversold. Also want to keep an eye out here for if this was a false breakout. We tried to push through and then pull back into the range. I think if you get a pullback to the rising long-term trend line that it produces an oversold condition, this becomes a lot more compelling. BPOP going on a bullish watch list today, but I don't feel compelled to get involved. Looking at your sector tracker, movement over the last 5 days. You can see the oversold rallies in some of the beaten down sectors, right? Materials, financials, industrials were routinely at the bottom of this list, and now they're at the top of the list over the past 5 days as they've rebounded from oversold conditions. Healthcare, been a leadership group for us, continues to be so. Energy, middle of the range, as with comms, and you can see that some profit taking in the defensive groups, real estate and utilities, down over the last 5 days after they've been strong market leadership with the sell-off in the equity market. Our industry in focus today is the NYSE Tech Services Industry Group, which over the past 6 months has underperformed the S&P 500 by nearly 9%. Its power bar ratio, which measures future potential, is very weak, with more bearish than bullish stocks. 9 bearish or very bearish stocks, 2 bullish or very bullish stocks, gives this a rank of 14 of the 21 subsectors that we look at, and it has moved up 6 slots over the past week. Some of the indicative very bearish names in the group: Qualcomm, QCOM, Alibaba, BABA, and JD.com. JD, I would advise just watching how BABA and JD trade today. If you're thinking about taking a position on the bearish side, some positive news on trade talks between the U.S. and China, likely to lend a bid to Chinese equities, and BABA and JD are in that group. But let's take a look at BABA, because I think it could give you a compelling opportunity on the bearish side if it lifts its head just a little bit more. Very bearish stock, weak trend, but a strong industry group. We lump it in with non-food, retail, wholesale. But this is an internet stock, and it's a Chinese internet stock. They've been under pressure. Relief rally could be a potential opportunity on the short side, especially as it has resistance in that 160 to 170 zone. They do report this morning. Reading the chart, ribbon at the bottom of the screen. Very bearish rating, market and model in agreement, dynamic duo in gear, as this stock has been underperforming the market since the July timeframe. Closer to overbought than to oversold with bearish money flow. I think we got to see how the stock trades around earnings here. I think if it gives you an opportunity, if it trades back near 160, that is a compelling entry point for a bearish trade in BABA. But obviously, we're going to see what they have to say this morning. They do report. This little sun here tells us their report in the morning. Looking at what's trending now, yesterday's S&P 500, movers and shakers. NFX up 16% as they are being bought out. Win up 12%. Been a while since we've had anything good to say about Win. We did cover our short position for our bearish insights clients when the stock was sub $100. However, some positive numbers, and by positive I mean in-line numbers, out of Macau. In-line is less bad than what we've been seeing lately. Jacked Win up by nearly 12%. AMD, a little bit of a relief rally here, up 11%. Abiomed reports earnings. Former high flyer, been under pressure. We'll see if this earnings report can change the trend. That was up 10.5%. Western Digital gets a bit of a relief rally as well. They rally 9%. These hard disk drive companies have been weak of late. ALL on the downside, down 6% following their earnings announcement. Fiserv down 5.5% as they missed expectations. implications. HBI down 5.5%. Investors didn't like what they had to say there. Perkin-Elmer, PKI, bearish stock, down 5.4% following their earnings announcement. And GE just continues to bleed out, back under $10, down 5%. A lot of moving parts to the GE story. Not a compelling entry point as far as I'm concerned. Need to continue to watch how that plays out. Taking a look now at our earnings update. Yesterday's surprises. EQIX beats by 54 cents. Parker Hannifin, PH, beats by 33 cents. Arista Networks beats by 21 cents. That stock is up 10% in the pre-market. EOG beats by 19 cents. And Motorola Solutions, MSI, beats by 20 cents. And obviously after the bell last night, all eyes were on Apple. Strong quarter. A little bit of a disappointment on guidance, and I think investors today are going to focus on the fact that Apple is no longer going to break out unit volumes. Analysts do not like to see that. Before the open, positive rated or bullish rated Duke will report. Neutral category, we're going to hear from ExxonMobil, AbbVie, and CBOE, and then the bearish stocks that we're going to hear before the open this morning, CVS and STX. STX is one of those hard disk drive companies. We'll see if they can follow up on what Western Digital did yesterday after the close tonight. I always say it, but Berkshire Hathaway, one of the few companies that can put their earnings out after the close on a Friday. BRK.B. Always like to hear what they have to say. So let's look at what we're talking about today. Relative rally in the small caps. Starting to think that this might be a false breakout or breakdown. This is that IWM relative to SPY, and you can see we broke below 2-year support and then quickly snap back and rally above. Let's see if we can sustain that level. Think that if the small caps can rally, that speaks to risk sentiment in the marketplace. A lot of moving parts, obviously. Stronger dollar helping it, but now the dollar's coming under pressure because of those trade talks. So we'll see how it plays out, but some signs of life in small caps. Remember back in this time frame, we said it no longer made sense to press the underweight small cap bet, and we were looking bad for a little while, but now we're snapping back. Still think that that makes sense. I think the underweight small relative to large story has largely played out for now. I wouldn't be surprised to see small caps continue to outperform. Does the move in semis have legs? This has been one we've been watching. This breakdown here. Remember when this broke support, we said that this concerned us for the broader market, and that largely played out. Semis continue to underperform. The market caught up with it to the downside. Now semis are snapping back. This is the SMH relative to the SPY. So this is semis on a relative basis. I think the real test is going to be when we get back to this, this breakdown level. If we can retake that level and the 200-day moving average, there are bullish implications for the overall equity market. However, and this is important, if we get back to this level or get back near it and then begin to turn lower again, I think that that will lead to another leg lower in stocks. This is one of the relationships that I watch really, really closely, and I think you should too. SMH relative to SPY tends to be a leading indicator. Look at how it topped out and started to go sideways long before the market topped out. I think this one's important, and I think we're going to pretty soon be at a key inflection point. And then weakness in crude oil continues. Here's that false breakout above the 74 level and then a snapback, hard reversal. And now we've broken through 64 to the downside. We're below the 50-day moving average. We're below the 200-day moving average, both of which are being given time to roll over. Also importantly is that for the first time in a year, the RSI has actually registered an oversold rating to coincide with these deep bearish Chaikin money flow readings. I think that this looks like a distributive topping pattern in the price of crude oil. I think rallies back towards the 200-day moving average are going to have a hard time breaking through, and that should sustain pressure on the energy sector and on the energy stocks within that sector. Keep an eye on crude oil here as further weakness likely sets up some opportunities on the bearish side in the energy stocks. So head over to chaikinanalytics.com, sign up for the email, chaikinanalytics.com/today. Get free daily stock ideas and the ability to follow along with this show. And if you like what you're hearing, help us spread the word. Share our link on social media. I hope everybody has a great weekend. We'll talk to you Monday, 9:15.